Welcome to Java. Thank you kindly for joining me. It's December 29th, 2024. It is somewhat late on Sunday as I'm getting this out, so my apologies for that. I'd like to welcome anybody that's a new viewer here. This is not for the year ahead that I'm going through. This is simply for this coming week and a little bit of what has happened this past week. So with this, let's go right into what we're expecting and seeing in the market right now. Starting with our favorite risk indicators, the MMRI, we are in extreme territory right now, and the two major elements for this is the relative strength of the dollar above 108 again, and the United States 10-year yield, which is above 4.63 at the moment. Now, these are ringing major alarm bells at the moment. This high risk on these is causing major fluctuations between the currency markets as well as trade itself. So I'll speak about that a little bit more. But right now, I'd like to speak about the fear greed meter right now at 34. So this showing, even though it's in fair territory, there are plenty of retailers still in the market, possibly to be fleeced. Now, with this sentiment, we've still got the large money, so to speak, is the institutions, and they're not going to be in full trading volume until a week from this Monday is the expectation on January 6th, because this coming week is now the holiday closed on Wednesday. So this low volume of traders is going to continue with high volatility. It's going to be a lot of chop. If you are not a seasoned trader, I urge caution this week and really try to protect your capital if you can, is the name of the game for this week. So going to cryptocurrencies, we've got Bitcoin has dropped quite a bit and then dragging down the others with it, but it is staying quite solid above the $93,000 level. Now we've got a basic head and shoulders pattern on Bitcoin at the moment, but as long as it holds at 92, 93, it's still relatively strong. See, there could be weakness coming forward. I'm still long term very bullish on Bitcoin. I'll go into that a little bit more further, but we're going to be watching these because if the dollar strengthens tremendously, that could also bring down cryptocurrencies. Now, this is all part of that currency flow. With this, we're watching Western currencies in general are all having a bit of an issue here. Now, we're watching the outlier is the yen. What is going on with the Japanese yen? Again, that yen carry trade, but with a little bit of a difference here. And the reason being that the yen is strengthening. They have just made their decision not to hike in order to protect the yen, but this means that they are selling off US debt, the treasuries, and that is causing part of this yield spike that we are seeing. Now, this in turn is strengthening the yen, but it's causing some ripples in the market. Now, with this, we're going to have to watch these currency flows. And if you've been here before, you know this can balance out several ways. One of them is within trade. So we'll talk about that in a moment. But what I'd like to say is this. Coming from Treasury Secretary Yellen, she has now come out saying the United States will hit the debt ceiling again mid-January, and that this will force the Treasury to employ what she's calling extraordinary measures. Now, it was not long ago that this same individual is coming out saying that the United States was fine and could come out affording two wars. Now, this was prior to the election. So she's shifted stance, and the timing of it being mid-January, directly around the time of the inauguration, is suspect to say the least. Now, I don't get political here, and really, it doesn't matter which side you go with, inflation is going to continue, but this is awfully suspect because she does get very political and she's not supposed to. So with this, I just want to point this out, that the United States and therefore globally are subject to the whims of these people. Now, this is an article and some research that I've also been diving into. It is Monetary Policy Without Working Theory of Inflation. Now, again, going back to not just Janet Yellen, but many of the others, practice what we call MMT, Modern Monetary Theory. If you're not familiar with it, kind of a summary of the basis is that the United States has the reserve currency and therefore can print as much as necessary and fund their own deficits. It's called deficit spending. And so that is what has been going on for a long time. We've got the Federal Reserve has been issuing the debt and then purchasing it back. So this is what is going on. It could come to a very sudden halt here if this should shift. So let's look at the calendar for this next week, going back to the markets. What we're largely watching, pending home sales Monday. Tuesday, the markets will close early, 1 o'clock in the afternoon, but we're getting the home price index early in the morning. Wednesday, they will be closed. So this is another reason the institutions and large money are staying out. The large thing to watch, in my opinion, is the jobless claims on Thursday, because it is known now that the Federal Reserve is watching that for their monetary policy going forward. We've also got construction and ISM manufacturing. Now, these give us windows into what is going on in the real economy, but the United States is not manufacturing much and running behind. This, along with the currency flows, is causing this trade deficit. So the United States, in effect, has a lot of goods that we've pulled in from other countries and not produced anything in return. So what are we producing? We're paying with dollars that is exporting our inflation. So deficit spending, purchasing other goods with these dollars. Now, other countries are catching on to this rapidly. So I'll speak about that in a moment. I do want to bring up something that's very sad. Had a plane in South Korea did crash. This is likely going to affect Boeing stock on Monday morning in the open. Just want to mention that. And then also because this also does play into the GDP as well as the military spending later. I'll get into that in a bit. But with all of this deficit spending, we've got individual nations now beginning to ditch foreign currencies, namely the US dollar, and 85% of trade is now done in their local currencies or local goods. So, last part of this, we've got financial analyst predicting massive debt crisis for the United States economy in 2025. Well, ask which financial analyst this is, and you could pretty much insert the name of any financial analyst because they are almost all predicting debt crisis for the economy in 2025. It is a massive game of Jenga. Most financial analysts know that this is going to crash. It is not a question of if, but when. So if you're betting on the timing, that is the only question. So this is not new news. It's just kind of heading forward. We can see if the new administration can do something, but the bets are against it. Now, I've got another thing that I would like to bring up about this, and this is the number of UK retailers facing critical financial distress. So this is the real economy, not what they're telling us that it's so wonderful. We've got higher number of retailers, businesses filing for bankruptcy, being sold out, foreclosing or merging. This is in the United States as well. This is a global issue. So with this, when they all close, people lose their jobs and become homeless. United States homelessness rising 18%. Among this, they're blaming it on affordable housing shortage. But really what it boils down to is they can't afford it because they don't have jobs. That's why I say the number one metric to be looking forward to is the number of jobs for the real economy. So we're going to go a little further because we've got a K-shaped recovery, if you call it a recovery, going on right now. We're watching a divide, upper, lower class, and it's getting more pronounced. So with this, we've got Gen Z and millennials driving BNPL stands for buy now, pay later growth this holiday season. So the stories are coming out that over the holiday, there was a large amount of spending, holiday shopping, improved consumer confidence, as you'll see here, and strong consumers when they're anything but. Buy now, pay later is a short-term loan. You can see it right here. People that can't afford to purchase anything, they no longer have the room on their credit cards. They're trying to get short-term loans because these are non-credit checked. So this is not really, in my opinion, a show of strength of the economy or the consumer, but rather the opposite, because they're using their short-term loans. And you can see it is the younger generations, as they're calling the boomer generations, still have cash and still purchase without getting these deeper into debt. So very divergent economy. This is going to continue. I'd like to say that I'm working on a couple of other things. I'm hoping to get out possibly this next Wednesday. Really want to cover artificial intelligence and the direction that it's going to push this economy, as well as cryptocurrencies. There's quite a bit going on with that as well. We are headed towards central bank digital currencies, and not the only ones. This is globally as well. So with this, I wish you all a wonderful rest of your day, rest of your weekend. I'll see you early in the morning. And until I see you again, my friends, stay free.